Hello and welcome to the third episode of the Thriving Treasury Podcast series, brought to you by Treasury Today and HSBC. This series explores how Treasury departments can build strategies for success in an ever-changing, globalised, connected and increasingly innovative world. In this episode, we explore the increasing importance of new technology, in particular data and analytics, for treasuries as they look for ever greater insight into customers, competitors, profitability and processes. I'm Sophie Jackson at Treasury Today, and I'm here in New York City to learn more about why corporates more than ever need to invest in data and analytics and how they can best leverage these new generation technologies and tools.
Data is now widely available. The tools and technologies are much more cost efficient to employ across the organization. So treasurers that really focus on this area can help their companies accelerate their growth and achieve their ambitions in a much more efficient manner.
That was Suraj Kalati, HSBC's Global Head of Liquidity and Investments Product Management. He specialises in helping treasurers to leverage data analysis to manage cash, optimize liquidity and address their funding challenges. Treasury departments around the world are facing increasing complexity and are turning to technology to gain efficiency and control over their treasury and risk management operations. In this regard, big data and analytics have become particularly hot topics in company boardrooms. Treasury and finance functions are seen as clear beneficiaries of these new technologies, promising as they do greater insight into customers, competitors, profitability and processes. And so in this podcast, Suraj and I will discuss how treasurers can become more data-driven and in doing so, better manage their working capital, liquidity and risk. Now it's time for me to head upstairs in the HSBC building to meet Suraj and find out more. Hi Suraj, great to be here. I'm Sophie Jackson from Treasury Today.
Nice to meet you, Sophie. I'm Suraj Kalati. I'm responsible for global liquidity and investment product management at HSBC.
Brilliant. And thanks so much for taking the time to catch up with me today. I'm looking forward to hear what you've got to say.
No, it's a pleasure and looking forward to our conversation.
Okay, so firstly, strategically thinking, why do corporate treasurers need to be investing in data mining, data collection and management? And what are the key challenges that they face in doing so?
So Sophie, this comes from the principle of good information will drive good decisions. Historically, accessing data, utilizing this data has been very expensive for companies. However, as business models change, companies are getting a lot more digital in how they interact with their consumers, with their clients, and with their supply chain. Data is being generated through the process. Now that data exists in the world around us, and it is therefore important for us to harness this data so we can start driving intelligence back into the organization. The challenges in this space is, as you can see, there is value from this data, but aggregating this data has had some practical issues. Data has not been accessible at the same time. It's not been accessible in the right formats. It comes through different areas. So this drives costs for the organization. So that's one of the challenges for them. The other thing is, how do you utilize this data in a meaningful manner in your company? How do you represent this data as information that can drive good decisions? That's also been a challenge for the organization. So the value of data is there. How do you employ this and how do you access this has been historically some of the challenges for companies.
So using a massive data to get real insight.
Correct, exactly.
So in actioning digitization of departments and operations, is there a general strategy that you would recommend to treasurers? And where does responsibility within an organization lie for developing an actioning strategy?
So Sophie, one size doesn't fit all. In a marketplace where advancements of technology are really occupying the headlines, it's easy to get distracted and not know which one to adopt. So I would say start with your objectives. What is it that you are trying to solve? And then look to identify the right technology to take you there. One of the areas of change, or one of the areas I would ask treasurers to focus on, is in driving this change and in evaluating new technologies, do engage other members of the organization as well as your supply chain and your banking partners. So procurement sales become integral to selecting what's the best way or one of the best tools that we can use to driving data and digitization within the treasury function. Banks and supply chain vendors also have good insights because they will talk to you about how best they can integrate with the treasury function as well. So technology is becoming an enabler, and digitization and this change is also becoming increasingly efficient within the organization.
Great, and you've mentioned there technology as an enabler. How specifically can new technology help corporate treasurers to manage their working capital, liquidity and risk? And are there specific technologies that you think treasurers should prioritise for data management and for data mining, as they've now been proven and can offer immediate benefits?
As one of the areas we see of change is clearing and settlement is now increasingly operating in real time, which means that liquidity management will increasingly take place also in a real time, with treasurers relying on bank and supply chain data from multiple systems. So APIs is a technology that comes to mind when I talk about data aggregation and how the process can be run more efficiently. It makes intraday funding decisions a lot more easier and can be optimized because information around the transactional flows can be much more readily available and accessible on a real-time basis as well. So again, this is how the landscape's changing and some of the technology that can sort of help move along with that change in the market landscape as well.
Brilliant. And if we think about the role that banks themselves play, what contribution can banks make to treasuries as they look to leverage data? And what insights can they typically offer from their own in-house data?
So as cash and liquidity management have become increasingly commoditized, banks' data strategies are becoming differentiators. By harnessing the wealth of data they hold, banks can help treasurers with things like benchmarking, forecasting, risk hedging, and even other things like yield optimization or transaction automation. So the data presented to treasurers will become more and more personal, with banks enhancing the client experience through easy-to-use portals that provide a dashboard on liquidity and allow easy access to tools to manage that. A major transaction bank with a global network will also help in standardizing the information and how that information is available in a cleaner manner to the company and the treasurer. So this will drive efficiencies not only in terms of data collection, but also in terms of data utilization. But nevertheless, attractive as this opportunity is, corporate treasuries are highly unlikely to have the budget or inclination to build their own platform for warehousing and analyzing this data. So the suitable interface is required, and through which they can access tools and utilize this data. For instance, HSBC has recently launched its liquidity management portal, which provides a dashboard that represents the bank data in a much more meaningful manner, intuitive manner, where treasurers can go down, drill down, understand their information, analyze this information, and then apply that in decisions such as funding, exposure management, and other risk modeling areas as well.
Perfect. And if we move to think about the future of this space, what are your big predictions for the data-driven corporate treasury if we look to the next 2 or 3 years?
So in the shorter term, data, which is a raw material, which typically now resides in silos within an organization, will start becoming increasingly integrated, where companies can access information through their commercial transactions, combine this with the underlying financial transactions, and understand the nature of their flows much better. They'll be able to identify, opportunities to accelerate cash flow, to improve yield, as this data starts getting integrated a lot more efficiently.
And what are your predictions looking a bit further ahead if we think about the next 5 to 10 years?
So longer term, I see that the treasurer's role will be one of less execution and less operational to one which will drive and fuel strategy on a much more consistent basis. The information and insights that treasurers will be able to access through the information available within their organization, plus also information accessible from the external marketplace, will give them the necessary tools to help drive strategy and inform key decisions for the corporate leaders, whether it's the CEO or the CFO as well. To sum up, I would say data is now widely available. The tools and technologies are much more cost efficient to employ across the organization. So treasurers that really focus on this area can help their companies accelerate their growth and achieve their ambitions in a much more efficient manner.
Thank you so much, Suraj. That's certainly been an eye-opening conversation.
Thank you, Sophie. It's been a pleasure, and look forward to speaking with you again.
That was Suraj Kalati, HSBC's Global Head of Liquidity and Investments Product Management. I think it's clear from his thoughtful insights that new technology is going to have an ever greater impact on the role and the responsibilities of corporate treasurers. As we move closer towards the holy grail of real-time processing and visibility, treasurers will come under increasing pressure to leverage new technology like data and analytics. By doing this, they can become increasingly powerful voices in the boardroom, helping to shape corporate strategy and direction. I've been Sophie Jackson from the Treasury Today Group. Thank you for listening to the Thriving Treasury Podcast, brought to you by Treasury Today and HSBC. Keep an eye out for new episodes and listen to old episodes of Thriving Treasury wherever you get your podcasts.